Hello traders, you are welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we are going to be discussing a unique indicator. It's actually a custom indicator and the name of this indicator is Waddah Attar Explosion Indicator. Okay, so for the purpose of clarity, I'm just going to be writing the name of the indicator right here on the chart so that we can see it clearly. The Waddah Attar Explosion Indicator is what we're going to be discussing in this video. Now, I'm just going to add the indicator to the chart right away. Right, this is how the Waddah Attar Explosion Indicator looks like. Okay, so basically, this indicator, as we can see, it uses a dynamic histogram to display trend direction. Okay, it's actually a trend following indicator, right? So I'm going to recommend using this indicator in a trending market in order to avoid false signals. Now, it doesn't mean that this indicator can't give some false signals even in a trending market, because it's not foolproof, right? Doesn't guarantee 100% accuracy, but you can have a higher chance of not getting false signals compared to in a consolidating market, right? So it's better you use this indicator in a trending market because it is a trend following indicator. So basically, how do you use this indicator to identify good trading opportunities? One, you have to watch out for the increasing length of the histogram bars, right? As you can see, the indicator window is divided into two. This zero line demarcates the upper territory from the lower territory. Now, the upper territory is the bullish territory, right? The lower territory is the bearish territory. So whenever you have the histogram bars in the upper territory, they are going to be always green, right? The color in the upper territory is green. And when the histogram bars remain in the upper territory, it shows that there is bullish momentum. So basically, whenever you have the red line flips to the upside and turns green, it's your buy signal. Right? So in this case, when we had the red line flip to the upside and turn green, we had a buy signal around here. So we would have considered entering a buy, and then we would have set our stop loss perhaps around resistance zones, or we can just wait for the indicator to flip back to the downside and turn red. That's going to be an exit signal. Okay, so if we had entered here, perhaps we would have considered exiting here, right? But in order to confirm if an exit signal is going to mean the end of the trend, you can decide to wait for two consecutive red bars to form. But in this case, it was just one bar, so we would have still stayed in the trend. But here, when we had two bars form, we would have exited our buy trade. Okay. Now, in the case of a sell, when you have the red bars form, that's a sell signal. Basically, when you have the green bar flip to the negative territory and turn red, then you have a sell signal. So we have considered entering a sell around here, setting stop loss above the previous swing high, and then for our take profits, we can decide to use support zones. We can actually decide to use support zones, or we can wait for the indicator to flip to the upside and turn green. And then when you have the indicator flip to the upside and turn green, you can decide to exit your sell. But for confirmation that the trend is not yet ended, in case of if that's up green bar is just indicating a pullback, like what happened here, this was just a pullback indication, you can decide to wait for about 2 or 3 green bars to form, okay, before you exit your sell. Okay, and basically, in addition to that, get confirmations from trend lines, get confirmations, okay, because if you are making use of trend line, remember the trend line is going to help you identify the direction of the trend. And as we can see, so long as the price has not yet broken the bearish structure, remember that bearish structure is formed by lower highs and lower lows. So long as the price is still maintaining that bearish structure of lower highs and lower lows, you can remain in your sell trade. All right, you can keep your sell position open. But when you have a break of structure, for example, what happened here, we now started having higher highs and higher lows. When you have a break of structure, you can then exit your sell trade. And same with the buy. So long as the bullish structure is maintained, even if you have a red bar form, you can maintain your buy position until you have a break of structure. But this is particularly going to be useful for swing traders. Why? Because swing traders attempt to ride trends for long. But if you are a scalper, then you can actually decide to be exiting at every sight of the opposite signal. For example, if you're in a sell trade and you find the green bars forming, you can exit your sell. And then when you are in a buy trade and you find the red bars forming, you can exit your buy. Basically, when you exit and then another signal appears, for example, let's say you are in a buy trade and then you find the red bar form, you can exit your buy. And when a green bar form again, you enter another buy. And then when the red bar forms, you exit your buy. And when another green bar forms, you enter another buy. So if you are a scalper, you can be doing that, right? And same with a sell. When you are in a sell trade and a green bar forms, you can exit your sell. And when the red bar forms, you can enter another sell. And when a green bar forms, you can exit your sell. And when a red bar forms, you can enter another sell until you have a breakout structure. A scalper can be doing that, right? So it depends on the kind of trader that you are. Okay. And then ensure that irrespective of the kind of trader that you are, ensure that you are always employing good risk management because it is necessary. All right. Do not trade with an amount that you cannot afford to lose, and make sure that you always observe good risk to reward ratio. Okay. If you are risking $1, your potential profit target should be $2. That is a risk to reward ratio of 1 to 2. All right. It is necessary so that even if you have equal number of wins and losses, you are still going to be on the winning side. Imagine if you had 5 losing trades and you have 5 winning trades. If you are losing $1 in each trade and you are making $2, that's times 2, right? If you are losing $1 in each losing trade and making $2 in each winning trade, if you lost 5 trades, you're going to lose $5. If you won 5 trades, you're going to win $10. So at the end of the day, you are still in a $5 profit. So you see the importance of good risk to reward ratios. All right. So basically, the Waddah Attar Explosion Indicator gives you precise signals. Whenever you just have, this is a quick recap now, right? Whenever you just have the red bars flip to the upside and turn green, it's a buy signal. And when you have the green bars flip to the downside and turn red, it's a sell signal. But ensure that you always make use of horizontal and support resistance zones, make use of trend lines, because these levels are going to give you insights as to potential reversal points. It's going to give you insight as to possible direction of price. Okay, so when you are making use of trend lines, you can use those as extra confirmations to the signals given you by the Waddah Attar Explosion Indicator. All right, so that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you do not miss out on more trading videos like this. In the meantime, thank you for watching, and I wish you a very happy trading. I hope to see you in the next video.